Case Alternative Investment Summit today in Beverly Hills. Joining us now, Franklin Templeton President and CEO Jenny Johnson, along with Matt Brown of Case, who's back with us now. It's good to see you again. Welcome. Great to have you on our program.
Great to be here.
You know, I have to admit, I didn't know, and I don't think many people out there watching would know that Franklin Templeton is now a top 10 alts manager.
Yes, it is.
It sort of happened under our noses here, and you've done a number of what you've called bolt-on acquisitions. Why?
Oh, I mean, there's definitely a secular change into alternatives. I mean, companies are waiting much longer to go public. We've seen there's half the number of public companies. You know, as a traditional asset manager, you have to address that secular change. And so we bought Lexington Partners, which is a secondary manager. We have Clarion Partners, which is a real estate manager. And private credit. Honestly, banks aren't able to lend like they used to lend because of the capital requirements. And so it has created this massive proliferation around private credit. We felt we needed to be there for our clients to offer that diversity. So today we have about $260 billion in alternatives.
Wow. What does the runway look like to you? You just feel like, as I discussed with almost everybody here, they don't think that we're near the end of the runway, that there's a long way ahead of us where assets are going to continue to flow here.
Well, I think, again, I don't think people are rushing to be a public company CEO. I think that they are happily staying in the private markets as long as there is the ability to be funded. And so, and you see it. I mean, the average company used to go public after 3 years. Now it's 10 plus years. So as long as that's happening and you have this increase in it, you're going to have more and more investments there. And I think what's happened so far is it's only been the accredited investors. Now it's about, this is what Case does, it's about democratizing so everybody has access. Because think about those early growth years of a company. It used to be post-IPO, everybody had an opportunity to invest in it. Now you have to be an accredited investor. And that's why Matt created Case.
So as we hear more about this, I have heard some people suggest, Matt, peak alts. Now everybody's talking about alts, and everybody's talking about every part of alts. How would you counter that?
Well, I would say that many years ago, no one was talking about alts, and those were very lonely days. But especially as an entrepreneur building a business around alts. But look, it's definitely the topic. You've seen really a transformational moment in how investors are thinking about getting the best returns, creating portfolios that have true opportunity. I think, as Jenny mentioned, in the private markets, many companies are not going public. So how do you really participate in the growth of private companies and its private markets and private market investing? And firms like Franklin Templeton that have been focused on marrying their traditional business and expanding it with alternative investment capabilities really make them the ideal partner to be on our platform. They have the DNA, they understand the advisor community. They've been doing that for decades with their traditional business. And now with this additional added alternative investment capability, we're really excited to work with Franklin Templeton.
How do you bridge these two cultures of sort of investing in private markets versus public markets, educating your clients, educating your advisors?
Yeah, no, this is actually a huge part of this because traditional private alternatives managers would go into a pension fund, you sell to a pension fund, they know exactly what their cash flow liabilities are for the next 20 years. But you go into a financial advisor, some clients should have zero allocated and some clients maybe should have 40% of their portfolio allocated. And so that tip of the spear of that financial advisor who is determining what is suitable for the client. Because again, these are illiquid assets. So number one, it's education, and we've built a alternative by Franklin Templeton, which is education. Actually, Case has a great education platform for advisors. We also have built a team of specialists who can sit down with advisors and talk about what's appropriate. Because the challenge the advisor has is if they put the client in the wrong vehicle, they will get in trouble from a suitability standpoint. And so they have to be really careful in this process.
How are you thinking about the future of what the typical or modern, let's use modern, portfolio is going to look like in the future, where we only ever talk about 60-40. Now we're entertaining the idea, of some have suggested 50-30-20. We talked earlier. How are you thinking about that?
Look, I think the technology now enables people to manage portfolios to a goal or to a solution, right? So if you were doing a retirement portfolio, target dates were kind of the first solutions in there. I think that naturally will be added to have privates in that. And as you get closer to retirement, you have less illiquid assets in there, but you get the excess returns early on and you get the benefit of compounding. So I think portfolios are going to be much more managed appropriately to whatever the end goal is with the risk and the time frame of that end goal.
Of all the alts that we've been talking about here and that are being discussed in the ballroom behind me, what's your sense of which is the fastest growing part of it?
Well, there's about $10 trillion that's anticipated to be allocated to alternative investments over the next decade. So as we think about as a platform, we get to see the flow of the capital. Where it's going right now is predominantly in private markets, largely private credit, private equity, private real estate. But of course, some of the more semi-liquid and liquid strategies are also picking up steam as well.